Okay, this video is basically just a video to discuss some of the really current things going on in the economy, and also just to clarify some questions that people have been answering, probably not in enough detail, and probably just taking the wrong sort of approach to answering these types of questions. Before we get started, just one piece of advice: read the CPAP updates, those quarterly reviews. They're really, really good. They've got a lot of current stuff in them. A lot of questions will come straight out of those CPAP guides, CPAP updates. So have a read through all four of them, particularly the ones looking at the current demand and supply side factors in the budget. And secondly, when you're linking things to real GDP, and I know I've said this in the past, but people still aren't using that term that increased aggregate demand will lead to increased production, which should help to boost the level of real GDP. So make sure you continue to do that, because real GDP is all about the level of production, so without that you're not fully answering the question. It's also important that you're actually linking it to all the components of aggregate demand as well. Alright, so these are just some really current questions that I basically think will come up, and then I'm going to talk about some supply side questions that people have need to just elaborate a little bit more on. The first question is, why has the Australian dollar rebounded a little bit in 2016? So we've talked a lot about why the Australian dollar is low, but it has increased a little bit this year, and it's basically for a couple of main reasons. The first one is that interest rates around the rest of the world continue to fall, so that's increased the level of capital inflow, because even though our interest rates are low, they're still comparatively higher to other countries. The best way to describe when you're talking about capital inflow is to say there's been an increase in interest, the people investing in interest-bearing bonds in Australia. So more people are willing to invest in what we call these interest-bearing bonds, because they'll generate a higher return, and that increases demand for the Australian dollar. The other reason the Australian dollar has rebounded is because there's been a slight rebound in commodity prices. So while commodity prices are still much lower than what they were in 2011 and 2012, they have actually rebounded in recent times, which is one reason why, therefore, people are paying more to buy the Australian dollar, and therefore there's more demand for the Australian dollar. And the third reason is that export volumes are still really high. This is probably the key reason why the dollar is rebounding. The value of exports has actually increased this year, so despite the lower prices and the fact that the lower terms of trade hurts the current account because it's the lower value of exports, overall, because the volumes have been so high this year, the value of net exports has actually improved and helped to reduce the size of the current account, particularly in recent months. So this is just a quote. This has helped to make net exports component of aggregate demand a key contributor to growth in GDP in the past year, where exports grow by 6.4% and imports fell by 1.2%. As we can see, lower volumes of exports sold at higher prices during the commodity price boom have been replaced by higher volumes sold and lower prices today, resulting in an overall increase in the value of exported commodities. So even though the price is low and that's caused decreased incomes and hurt our growth, we are selling a lot in terms of the value. Demand and supply side factors. These are things that you can link to nearly every single goal, and there's always a question about these. Also, just remember, when you're talking about growth in Australia, don't be too negative with your analysis. Now, growth in Australia is not too bad at the moment. We have growth at 3.1%. Unemployment has fallen, still above our target range, but at 5.7%, it's not bad. It is going down. There's still a lot of spare capacity in the labour market, but unemployment is trending downwards. The main reasons for the fall in unemployment, so if you do get a question about an industry sector that's improving in Australia, and industry sectors mean things like manufacturing and mining and things like that. The household services industry is the big one. So basically there's been a lot of demand, particularly for healthcare, mainly because of the ageing population. That's one of the key industries where they're generating a lot of extra demand. There's also been strong growth in business services, so accounting and things like that, which is also helping to boost boost growth in the economy. Alright, demand and supply side factors, these are the only ones you can use. Don't use anything outside of what's in this table, because you're not talking about things that are current. So for example, don't talk about lower productivity growth as a negative for supply, because it's not really happening in the economy at the moment. So the demand ones, lower interest rates, I'm not going to go through that, that's pretty straightforward. We've talked about it a lot in class. If you're not sure of the channels, go back, have a look at the videos related to the channels or the notes. Declining commodity prices is still relevant, even though they've gone up slightly this year, and it's worth mentioning that in your answers. Overall, commodity prices are still falling over the last 4 years, and the main thing to link this to is lower incomes and less investment spending. Less investment spending is the big one, because that's what's caused the lack of the most decrease in jobs, and what's caused the biggest slowdown in growth. Other things you can talk about: slowing growth in China and their shift to more consumption spending. Away from investment, so they're not demanding as many of our commodities in terms of, so the price has gone down, even though the volume is still high. The depreciating dollar is another one, although if you are going to talk about the depreciating dollar, actually state that it actually has gone up a little bit this year. It's just been lower than what it was sort of at its peak. So it would be acceptable for you to say there's been some appreciation of the dollar this year, but show the examiner you know what's going on. There was a depreciation, and then over recent months it started to appreciate again. Falling household savings ratio is another one, which is leading to increased consumption spending. People are saving less of their disposable income. And consumer confidence has bounced back a bit, although I wouldn't be using that as your main one. Supply, lower oil prices, good helping supply because it's lowering firms' cost of production. You can also link that to demand because people have more discretionary income, but you've got to link that to willingness and ability to supply. Lower growth in wages and real unit labour costs. And if you are going to choose that as a supply-side factor, the best way you can answer that question to show your level of detail and your understanding is to say that the lower rate wages have been caused by increased underutilisation. There's more people in the workforce that are not working to their full capacity, and that's leading to lower wage pressures. So they're the main two to talk about. All right, answering policy makes questions, particularly supply-side policies. Just firstly, it's really important that you know what things actually mean in terms of demand and supply management policies. So the two government demand management policies, if you get asked like that, are budgetary and monetary policy. So if you get asked, how the government demand side policy is being used to stabilise the economy, you've got to talk about what budgetary and monetary policy would do in a peak and a trough. So in a trough, for example, there would be like tax cuts and welfare spending and all that kind of stuff. And monetary policy would be expansionary to try to get us out of the trough, and vice versa with the peak. Don't ignore discretionary policies. I've seen a lot of answers that have talked about in that 2015 exam about what would happen if unemployment increased. And everyone's talking about the automatic stabilisers. Also talk about what the government would do deliberately to try and promote growth. Supply-side policies. Supply-side policies do include the budget. There's lots of budgetary supply-side policies, but it also includes immigration, environmental policies, and trade liberalisation. Whenever you get a question about the policy mix and you're talking about budgetary policy or budgetary supply-side policies or something like that, don't just talk about one policy. There's so many answers where people just talk about one thing and pretend like that's an overall analysis of the budget. Talk about a fair few and talk about them briefly to show your full understanding of the budget. And a good example of that would be with supply-side policy questions. So I'll come back to this bit here, but I want to talk about this question here in particular. I'm seeing a lot of answers to this question that aren't really sort of hitting the nail on the head. So the question, it was in the 2013 exam, and it says, discuss how budgetary supply-side policies and immigration can work together in the policy mix to achieve an increase in aggregate supply. And most people are doing is they're just choosing one budgetary supply-side policy from this year and talking about that, and then that's it. And it's not really what the question's asking. You don't even need to mention this year's budget because it's not saying that in the question. What they really want for you to do is actually analyse how the budget can be used to try and boost productivity and participation. Okay, just talking about the decrease in the company tax or something like that is not a sufficient answer to this question. Okay, what you should be talking about is saying, aggregate supply is about increasing firms' willingness and ability to supply. The government can implement a range of strategies to improve the willingness and ability to supply. This includes infrastructure spending, which would help to reduce capacity constraints in the economy. Increasing the pension age and childcare subsidies, which can be utilised to try and boost participation and therefore reduce wage pressures. They can also lower income taxes to try and promote productivity and participation, or lower company taxes to promote investment spending, or increase spending on education and training. No, you don't need to talk about every single one of these, but you want to show in your answer that that's what budgetary supply side policies are. All of this kind of stuff, and how they're working together to try and boost participation and productivity. So I will be mentioning 3 or 4 of these, as a minimum, not providing a lot of detail, but showing overall what the budget can actually do to try and promote supply. If it does specify this year's budget in the question, which this one doesn't, that's when you start talking about in this year's budget they've boosted infrastructure spending in the Northern Territory. They've got the Youth Jobs Path, which is going to create increased skills for workers. They've got the lower income taxes for the middle income tax bracket, or the lower company taxes, which will promote investment. But make sure you do a good, well-rounded answer to that question. The other supply side policy mix question that's worth noting is explain one feature of the relationship between monetary and budgetary policy in Australia and how that might influence aggregate demand and living standards. A lot of people are basically just analysing the stance of both, which is good. It's a good way to approach the question. So what's happened with monetary policy? It's been expansionary. What's happened with budgetary policy? Well, they're promoting fiscal consolidation. And then people are just sort of talking about a channel or something like that. the good answers to this question are actually talking about one feature of the relationship. So how are they actually working compatibly? Not what one of them is doing individually, but how are they working in unison to try and boost growth and promote living standards. And there's a range of ways you can go about this question. The best ways to talk about is, and how I would answer the question is, I would go with, well, lower interest rates are working in accordance or synonymously with lower company taxes, which are both working to try and promote investment spending. Because the lower cash rates encouraging borrowing, where the lower company tax rates are encouraging investment as well, because firms get to keep more of their after-tax profits. Other things could mention is that the lower budget deficits are helping to reduce crowding out, which is achieving more sustainable growth, and therefore that's allowing for lower interest rates and supporting the lower interest rate setting, or that the fiscal consolidation and the government, trying to consolidate its finances is allowing the RBA to be more expansionary and promote growth without inflationary pressures. But you need to analyse some feature of the relationship. It's not enough to just go off on a tangent and talk about what one of these policies is doing to promote living standards. I'll talk about the next parts in the next video.